Good morning, everyone. I don't really know what's up with the market, but I feel like 1 out of every 3 days, as far as the first hour of price action, 1 out of every 3 days is just an absolute dud. Um, and today was one of those three. Yesterday was a fantastic day, as you guys know, 100% accuracy. Today I finished small red. I'm lucky to finish small red. Um, and as you can see, I only trade the first hour of market open. This is the first hour of market open. As you guys know, if no pivots get swept, I don't make money. It's simple. That's the way I trade. I'm fine with the way I trade because it makes money. And this is this kind of price action where it's just compressing out of market open for whatever reason, um, is a minority. And that's all that matters, right? In the long term scheme of things, right? Uh, but if we jump back in time to market open just beforehand. My sentiment was pretty easy. I was leaning bearish, at least for the nearby pivots to hit. We do have some nice pivots up here, but our closest pivot was here. Kind of looked like bearish consolidation. This is kind of what I was going for. Let me do that. Here's a pivot roughly here. If you guys hear a kitten crying in the background, ignore it. Actually, my crisp may remove it. But all right. So, gosh, she's freaking going crazy right now. It's super distracting. Anyway, so yeah, that was my pre-market analysis. Leaning bearish for the pivots below. There were a couple more pivots. We had like this one here. But market open, super bullish candle. We invalidated that candle. And when we invalidated this candle, I took an easy QQQ put trade. Very small trade just to the nearest pivot. Wait for it. Here is pretty much at the end of this candle, going into the start of the next candle. I think this is where I filled. It looks something like this. Roughly here. Filled a little bit lower. Roughly here, just kind of a scalp continuation trade to the nearest pivot. And yep, this is what it was. I filled roughly here, put in a buying wick so you guys were able to get a better fill than me. Put in lower lows with buying wicks, which I called out to you guys was super bullish, and we did get a bounce, but thankfully the bounce did invalidate, and we did hit PT. Now, I sold all except a runner position right at PT, and then dumped the rest of my runner position on this candle. Now, I didn't really want to dump the rest of my runner position on this candle, but I didn't want this trade to flip red. Now, ES still had a perfect double bottom, which I'm bearish to break, but for now, we have lower lows with buying wicks, and this is a massive, this is a freaking massive reversal candle. I can't hold puts through this, right? So I locked in a whopping 12% gains on this trade, so very small win. Pretty much the entire trade got 12% gains. I mean, it's kind of hard not to when it perfectly hits your PT before it reverses. So starting off the morning good. We had this perfect double bottom, which, as you guys know, I'm bearish to break. But right now, we're kind of invalidating a majority of the drop. I'm kind of leaning a little bit bullish for that. Well, we end up coming down, and I can't get back in because now we're chopping down. We're making lower lows. I mean, the demand isn't a really big deal on ES, but we're making lower lows on all these pivots here. It's not a place that you want to hop into puts. So kind of stuck. It's either calls or nothing for me at the moment. So this candle happens. Unfortunately, I'm not in puts when this happens at all because there's no way for me to be. We were chopping down. We were, putting in those reversal candles. We did break under the 38.2% fib of this entire run. So at this point, you can see kind of the head and shoulders up here too. At this point, I was leaning kind of bearish for us to continue down to the 61.8, which would be roughly here, because that's the rule, right? If you break the 38.2%, your next PT is the 61.8. So I'm looking for price action to stay below these lowest pivots that it swept, which is this, and give me some bearish consolidation. That's what I'm looking for. If I get that, I can take a continuation trade to the 50% or 61.8. Almost got in here. Not actually, I didn't. I could have had an excuse to get in here, but I said I at least need two or more. I need bearish consolidation with at least two or more oscillations. This is only one oscillation, and run pivots. I'm bearish, but it's too risky to alert a trade. Then this candle happens. I gotta hop in calls on this candle. We swept pretty much all the liquidity on my screen. We even validated a majority of the drop. It was a little bit early. You could wait for the 61.8 to break, but in my opinion, it was going to break the 61.8, and I was correct. So this was a pretty easy trade to get into. I actually got in at the start of the next candle when it was red, and I filled the SPX calls. They were pretty even in strength, and when they're even in strength, I tend to lean towards SPX because that has the extra benefits of trading it due to the type of asset it is. So this was pretty much a trade right here, and I think I filled roughly roughly there. I believe the trade was like a 1.3 something risk to reward. Pretty decent trade. Started out green. I forgot I filled at, I want to say 2.6 maybe. Let me check. 2.45. That's what it was. Started out okay, but ES flipped weak, and we were putting in a possible inverse head and shoulders. So I'm like, okay, that could still be bullish. I stopped out early on this candle. If it wasn't this candle, it was the next one. Let me check real quick. 7:01 I stopped at. No, 7 o'clock I stopped out. So not on this candle. When this candle invalidated, I believe. Let me see. Yes, right here. So when the bounce invalidated, unfortunately, it put in a massive buying wick right after I stopped out early. But my thing was, okay, how hard did it fall? Well, we invalidated most of this entire bounce. Is there any way that this right here looks like an inverse head and shoulders? No. So pretty much when it first put in this bounce, I'm like, okay, you know what? I'm going to cut these contracts early when the bounce invalidates. Because these calls were dropping a ton. And I accidentally said puts in my channel, but the calls, right after I entered, they hit 20% gains. They went from 2.45 to 3.0. Obviously, I didn't sell because not a single PT was hit, not even close. But these dropped all the way to 1.85. Or sorry, they dropped all the way to like 1.7 something. And during this bounce, they didn't gain much value back at all, right? They got back to like 1.95 or something. So the calls were starting to chop. And if I waited for this stop loss, I was probably going to fill at roughly 1.6. And that's just too big of a loss. I don't really feel like taking like a 35% loss, a 40, a big loss. And also, as far as I can see, the trade's invalidated. Now, keep in mind, I cut this trade when this candle was still red. The second this invalidated, I pulled the plug. Unfortunately, it did put in a buying wick and ended up bouncing, so you guys didn't lose as much on this trade. Bounced all the way nearly to break even. But in the long scheme of things, if I kept my stop loss initially where it was at and just waited for a candle to close under it, I would have ended up stopping out at roughly 1.5 for a much bigger loss. That would have been a roughly 40% loss. So it ended up being fine in the long run. It ended up being fine. So that was my first loss of the day, and I'm currently red on the day now. And I'll go back. I'm currently red on the day now. First trade was plus 12%. That was minus 24%, and that was a full-size position. So I'm red by roughly like 115% green trade, if you will. Because remember, the first green trade wasn't completely full-size because I did leave a couple runners. So like 115% green trade will make me break even on the day is pretty much where I'm at. But we ended up bouncing. I was starting to like calls again. I really was. And in fact, I almost got back in on, was it this candle? No, it was this candle right here when it was a solid green candle. I was considering getting back in because we were chopping down. This looked like a descending broadening wedge. But I wanted to wait until this entire drop invalidated with no selling wick whatsoever, and then I'll take a chance on this trade heading to this pivot here. So I tried to be as patient as I possibly could this morning. Got into very few trades, and I succeeded at that. I wanted to hop into puts here. I didn't. Saved a loss. I wanted to hop back into calls up here. I didn't. Saved a loss. And there's a couple more times like that. But also during this run up, one of the things I kept saying was when I said filled my stop loss at $1.85 for minus 24%. There's a nice wick right after I filled, but I'm honestly watching QQQ puts again. And then I said, shake my head, perfectly swept me. Starting to look at decent calls. And I said, not fully convinced though. I'm still liking QQQ puts to new low of day more. But obviously the tone of the day is set, right? This is a choppy morning. So I'm going to have to adjust. That last trade should not have been a loss. It really should not have been a loss under normal market conditions. So I got to adjust. So I ended up filling QQQ puts very early, right at the close of this candle. I want to say like I hit enter right as the candle closed. I ended up filling QQQ puts with a PT of new low of day. During the entire bounce, NQ looked weak. It looked weaker on the way down. And that's just where my bias was at the moment. And I started trimming this fairly early, especially when we put in this buying wick here. Because again, it's super choppy, but one thing I noticed about ES is it's having a hard time invalidating that whole drop. We also have a fairly decent trend line on ES. We are compressing. This is a pennant, so I don't know which way it's going to break. So I'm trimming on the way down in preparation for worst case scenario. We end up just making lower lows here and then going back up. And I did end up being fairly correct on that. So I entered those. I got a really good fill on those puts. I filled at 51 cents. And the puts ended up hitting 71 cents for 39% gains. Now keep in mind, my average gain on this trade, because I was trimming actively on the way down. For example, I trimmed right here because ES made a low. And the contracts, this would have been finally the point at which I would have stopped out of my SPX put calls if I didn't stop early. But I'm glad that I did because I would have taken a much bigger loss. But I trimmed more for like 25%. They hit 39% here. So I averaged roughly, even though I did my highest trim was at roughly 71 cents for 39%, I think I only averaged about 20%. Because I still had a little bit left when this reversal candle happened, and I did dump them at break even. Right during the next candle, I believe it was. Nope, this one. Nope. This one, yep. I cut them at break even here. I just wasn't willing to allow this trade to go red, and that was a great idea as well, because it didn't really hit my big PT, but ES and NQ both got new lows. It was making buying wicks on the way down, which made it fairly easy to trim. So I'm glad I did trim. Back to green on the day. I said I only need roughly 15% green trade. I averaged about 20% on that trade. So slightly green on the day now. I'm green by roughly 5 to 6% trade, normal size. And, it's just a choppy mess. I mean, there's not much I can do. It's trying my best to time a breakout because I don't trade breakouts, especially in choppy. If the market's not choppy, I will. But if it's a choppy market, I will not trade breakouts because they will just be liquidity sweeps and they will end up reversing. But we are compressing a massive amount here. I mean, you can move this down to here. Who cares? Doesn't need to be perfect. So I'm trying to figure out whether I like calls or I like puts at the moment. And right here, I was liking calls. Now, at the moment, the NASDAQ looks stronger. This ends up changing though, and I end up filling SPX calls Not here. Not here. I took some small calls personally. I took literally 2 QQQ contracts, like freaking tiny amount, right? 20% of, no, far less than 20% of my average trade. Usually take like 10 SPX contracts. Um, so during the way up, one of the things I said is I am bullish. You know, I'm looking for at least the near pivots to clear. So that would be this blue line gets hit on ES, which also is like a perfect double top or triple top. There's a lot of rejections at this level. I do like that level a lot. And then this level here on NQ. This is what I'm looking for, but I said if we get a pullback and invalidate that pullback, I will enter. Well, this candle gave me a pullback, and I ended up pulling the trigger on an entry here. Now, I didn't quite go half size. I was a little bit bigger than half size, but I wanted to save buying power to average down or possibly average up if we really break to the upside and start getting momentum. Because one of the things I said to you guys is I think we're due for a short squeeze. Just the way price action has looked, the way it's been chopping down within this pennant. I wouldn't think it would need a short squeeze if this got all the way to the trend line. Right? If this oscillation got all the way to the trend line, I wouldn't be bullish for a short squeeze, but it didn't get all the way to the trend line. And instead, we were just sweeping lower lows, gathering buy side liquidity. Usually a very good circumstance for a short squeeze to occur. So I pulled the trigger a little bit early because it technically was a pullback and then an invalidation. But what do you guys see here? I see a potential inverse head and shoulders, so I will save buying power to potentially average down. So I filled roughly here. I got a pretty decent fill. And it was a really tough decision because we ended up pulling back. I could not decide whether or not to average down or just cut the trade here. I did end up averaging down right when the next candle ended up opening green. So my initial entry was at 2.5. I averaged down at 1.3. It's not 1.3, 2.15. And my average was around 2.3 to 2.35. So, freaking cats are raising hell right now. So it ended up being a pretty decent average down. We ended up getting up, and that brought my average to roughly here. And now my average was pretty hard. I had a pretty hard average at the moment. Give me 1 second. All right. So not pretty hard average. Pretty hard stop loss. It's like, dude, I have freaking creatures jumping all over me at the moment while I'm trying to do this review. It's very very distracting. Very hard stop loss at the moment. Well, it hits my stop loss, and sorry, my stop loss was exactly right here. If a candle closes even slightly below this point, I'm out. Well, this random candle shows up. It's a huge candle, but immediately it puts in this buying wick. And I'm like, oof, because when this happens, you know, you get a volume spike, the buying wick is bullish. We potentially have double fake prophecy on this pattern, which did end up playing out. I decided, all right, I'm going to stop out if the buying wick invalidates because it's right in that gray area. If that buying wick was not there and the candle just closed like this, I would have been out. But because the huge buying wick was there, and keep in mind, I didn't even get really a chance to stop out because that buying wick was there from the start. Right after it dropped, it immediately popped back up with a buying wick. So, and keep in mind, these calls are chopping at the moment. So I filled, my average was at roughly 2.3. And the calls were chopping a ton. During this buying wick, the calls really didn't recover much. And then we started bouncing. And I'm like, okay, the second this bounce invalidates, I will be out. Because again, this entire bounce, the calls are chopping. And if at this point I wait for the buying wick to invalidate, instead of taking a loss and selling at 1.85, which I would if this bounce invalidates, I'll be selling at roughly 1.3, 1.2 and taking a huge 50% loss. And that's not an option, right? I'm not one of those people or analysts slash traders that cares a ton about their win rate and tries to save every potential red trade. Because those people will love to flex, and I've been one of those people, which I'm speaking from experience. They love to flex 90% win rate, so on and so forth. In this server, we recently removed some analysts that did that. Flex 90% win rate, but at least once a week, you know, once every few days, however long, maybe once every couple of weeks, there's going to be a red trade, that they're not going to be able to save, and they're going to be wrong about it, and they will never share how they crash and burn on that trade, right? And they take everyone down with them. They keep averaging down into infinity, and it's not profitable. Because while it looks profitable on the surface, assuming that they stopped out and they took more trades and made it back up right away, that's never the case. And you guys can type in chat if you relate and if you guys have been there. That first, you can go on streaks of green for days or even weeks, and that first red day will come along and it will absolutely wipe you out. All of your gains plus more. And that is a self that I put behind a long time ago. And this is why I'm so hard on my stop losses now. Because at the end of the day, it doesn't matter. If I'm not disciplined to stop out when I initially agreed to stop out, do you think I'm going to be disciplined enough to stop trading after that doesn't work out? If I wasn't disciplined to stop out in the first place when I agreed to stop out, do you think I'm going to be disciplined enough to stop out after I'm extremely red and I've already broken one rules? Who's to say I'm not going to break more? And that's usually how it goes, right? So we end up bouncing, and I stop out on this candle. Right on this candle, no questions asked. Invalidate the bounce, I have to be out. Now keep in mind, I am currently testing the mechanical future strategy, so I was still in longs because that's the hard stop loss didn't hit yet. And keep in mind, I'm still very bullish for that blue line to hit, but it's not worth the downside risk. It's not worth the downside potential, right? Because if I don't stop out here and I'm wrong and it continues going down, it's going to be a very, very, very big loss that I may be able to accept, but most people will likely not be able to accept that loss. So by taking the loss here, I cut it at 1.85 and I got only minus 20% on the trade, which wasn't bad at all. That puts me down at roughly 1 minus 15-ish% loss on the day. So I'm red by one small red trade on the day, which, take a look at the price action. It's lucky that I even got a single green trade, because typically on days like this where you do nothing but compress for the entire first hour, there's going to be no money to be made, right? So, but of course we end up going right back up. But you're not going to catch me breaking my rules. I agreed to myself and make that contract that I only trade the first hour of the morning, and I don't care how great the second hour looks. I even said in my channel, the second hour price actually looks great because we sat there and did nothing but compress and prepare for a move the entire first hour. But you won't catch me breaking my rules, just like a casino never breaks their rules, right? Why would you change things up when the law of probabilities is in your favor over the large series of events, right? So I did get perfectly swept on this, but I had no choice. I followed my rules perfectly. And yes, if I didn't stop out, these contracts would have dropped back to 1.5, making me hold through a minus 30, 35% loss. And yes, I would have been able to bail out for green, but then you would have reinforced poor psychology, right? And if you did that this time, why wouldn't you do that next time, right? If I really didn't want to stop out of this trade that I was confident it was going to work out, and I didn't stop out and I was rewarded for that, guaranteed, because that action was reinforced, next time you're very tempted to continue holding your trade because you really believe that it's going to work out and you don't stop out as a result, and you're wrong, it's going to absolutely wipe you out. And that's why a lot of people cannot break through the threshold of consistency, because they know that a majority of the time their sentiment is right. And when they're very confident in their sentiment, they don't stop out. And most of the time they are right and they end up making money. But it's statistically guaranteed that at one point, likely in the very near future, your confidence is going to be wrong and you're going to take a massive loss. And then the second the market goes too far out of line with your expectations, you're going to enter mind freeze, you're going to shut down, you're either going to average down or just sit back and watch the market take all your money away because your mind is frozen and your expectations are so far outside of the reality of the environment you're operating in, your brain cannot process it and it shuts down. All of you guys who have traded or who have traded and currently trade, including myself, have experienced this. And You don't want to play with fire, right? If you have a perfectly profitable strategy, you're going to get barely swept and it's going to go to PT. Just like there's going to be plenty of times that it's barely going to get to PT and then it's going to go right back down. For every super unlucky event, there's a super lucky event on the opposite side, especially when the law of probabilities is in your favor with your edge and whatnot. And most of you guys never ever see that lucky balancing outcome because you're too busy blowing up your account whenever you get unlucky, right? If you don't blow your account, you honor your stop losses, allow yourself to be unlucky, you're finally going to experience being lucky. And again, most people don't experience that because they're too busy blowing their account every time they get unlucky. Type in chat, does that make sense? But anyways, that was my last trade. Really unfortunate, but I traded the entire first hour. I did the best I could. You know, even with this trade, usually I'll just hold trades to PT. This trade, I trimmed it very early, quickly. So I even forced a couple of green trades in there. Literally did the best I could, but not a pivot swept. Did nothing but compress for the first hour. That is a proper red day. That's what a red day for me is supposed to be. And as long as those days happen a minority of the time, which right, it used to be like 1 out of every 20 days. Right now it's like 1 out of every 4. That's fine by me. Stop meowing. But does anyone have any questions whatsoever regarding anything that I just talked about? No questions? You guys got to do it. Again, for every time you get super unlucky and it barely sweeps your stop loss before going to PT, there's an equal and opposite time that it will barely sweep your PT and then go right back down. And if that doesn't happen and you find that 70 out of all the super lucky slash unlucky events, I'm talking about all the times that it barely gets your stop loss and goes right to PT, and all the times that it barely gets your PT and goes back to stop loss. If most of your extreme luck events are the unlucky ones over the course of like a month or 2 months, where you've barely been swept out of your trade, you stopped out and then it went right to PT 20 times, and your PT barely hit and then went right back down only 4 times or 5 times, great. That means your TA needs a change. Your stop loss is too tight. There's data there. And then you adjust, and in 2 months, you're a far better trader, and now the law of probabilities are genuinely in your favor. But you're never going to get to that point if you are too busy trying to save every freaking unlucky outcome. You will never become a better trader. You'll get stuck with the same unfavorable probabilities that your edge produces, and you never even know because you cheat your stats. Every time you're confident, you break your rules to try to make money out of your confidence, and you don't become a better trader over the long run. You have to journal, you have to document your data, and you have to be willing to accept getting hornswoggled like I did this morning so that you can improve in the long run. But that was my morning. And type in chat if you guys have any questions regarding any of that or comments. Right now, the market's looking a lot better. You know, I'm looking at it on Thinkorswim. Looks great to sweep some pivots to the downside. If I actually zoom out here, yeah, that looks great. See, way better volatility. We're getting pivot swept on ES. If I traded just a second hour, it would have been profitable. But it is what it is, right? Overall, it's a very range-locked day, unfortunately, which is a complete 180. Like, when we started the week yesterday, I thought this week was going to be a great week. I did not expect, especially after a choppy pre-market where we just made lower lows. Like, I really thought we were going to break to the upside and run, right? Now, you don't see me bag holding and breaking rules and averaging down a million times to try to catch it, or else I would have been broke right now. But after yesterday's huge run and after the consolidation overnight, I did not think we were just going to compress all morning. But that's what happened. But I am happy to say perfect psychology, perfect rule following. It was glorious. Shitty win rate, but who cares about that when you make money doing this? So But all right, and for all you guys that are going to experience the new indicator I'm releasing, which is free for you premium people, I'm getting ready to publish it right now. Right after I get out of this voice, I'm going to publish the alpha version. All you guys will be able to test it, and you guys will use the indicator feedback channel to give your feedback. I haven't tested replay mode with it much. I'm going to create an informational video right after this so you guys know how to use it. And yeah, over the next week, we'll continue updating it and stuff. And ideally by Monday, we'll release the formal final version that you guys will be able to use permanently. And again, it is included with your guys' membership. What's the indicator? It is a glorious perfect pivots indicator. It's something that I will use. Keep in mind, it's rare. Perfect double bottoms and triple tops and stuff are rare, so I won't use it every day, but it will always be on my chart, so I never miss those opportunities. But all right, that is it. So I'll let you guys know when that indicator publishes, and I will let everyone else know when this recording is released. Hopefully, you guys that continue trading do so in a elevated state of mind, and good luck. Anyways, I will talk to you guys later regarding the indicator and stuff. And yeah, you guys have a blessed rest of your day. I'll see you guys later and let you guys know when this recording's posted.